This is the Asia Trade. I'm Shery in Tokyo.
I'm Haidi, Stroud-Watts in Sydney, where the market has just opened. The top stories this hour. Asian stocks are set for gains after Wall Street dip buying overcomes trade war jitters. Mainland Chinese markets set to reopen today amid the tariff tensions. Beijing responding to US levies by targeting a handful of goods, companies and critical minerals, signalling a cautious approach from President Xi. And Alphabet is one of the companies singled out by China. Its shares sliding in late trade as it reports disappointing cloud sales growth. We do have some breaking data out of South Korea when it comes to inflation gauges there. The CPI numbers for January coming through as a headline number. Consumer prices rising 2.2% against an estimate of 2.1%, so more or less in line with estimates, a little bit hotter than expected. When it comes to that month-on-month gauge, a 0.7% gain against expectations of 0.5%. If you strip out more volatile food and energy prices, we're seeing a gain of 1.9% year on year there as well. So continuing to watch inflation levels when it comes to the meaningful implications for the Bank of Korea. They are expected to cut rates for the third time this cycle later this month. A lot of concerns about economic cooling domestically, political turmoil that continues to play out, as well as these global trade headwinds as well. A lot of concerns about private spending being stagnant and household pressure, as well as these ongoing tariff threats. Shery.
We'll get an indication of how China is doing. Of course, we are getting the markets back today from Lunar New Year holidays, and this coming after that U.S. tariff went into effect, additional 10% on China. And of course, we saw the measures coming from Beijing that were swift, but also very calculated. So we saw the upside in markets overnight. Right now, this is the setup. Nikkei futures looking to the downside of 0.25%, but you can see right there that when it comes to the ASX 200 early in the session, obviously, as we're seeing that staggered open is still to the upside. The Japanese yen also weakening slightly against the U.S. dollar. We have seen that safe haven move pare back a little bit, but it will really be about the yuan fixing that we'll be watching, especially if we'll see that the PBOC is letting the yuan weaken, perhaps given the additional tariff costs. But this is a big speculation in the markets right now. Usually the CSI 300 index has historically come back online after a Lunar New Year holiday on the upside. But take a look right now what the setup is when it comes to U.S. futures, because we might be taking a hit on the tech side of things. We mentioned Alphabet earnings disappointing. We also had AMD results disappointing, and you can see the futures trading at the moment remains to the negative. This is after that rebound in the regular session, though, Heidi, because there was a lot of optimism and perhaps a wave of dip buying that these measures from China and the trade war could be contained. Of course, we'll be watching the dollar and its performance, because we're seeing the first fall in 6 sessions. And gold futures also retreating a little bit after touching record highs, of course, on that haven demand, Heidi.
Shery, let's get some more analysis on our top story when it comes to these ongoing trade tensions. Response from China. I want to bring out Chief North Asia correspondent Stephen Engel, also Garfield Reynolds, who leads our Markets Live coverage. And Steve, I'll start off with you. Look, lots of analysis already when it comes to Beijing's response. Measured, muted, cautious. Does this speak to the sort of domestic, precarious domestic economic situation? Does it speak to the hopes that maybe something will be agreed upon when the two leaders finally speak?
Yeah, I think it could have been worse for China, obviously, and the market has reacted that way. And I'll leave it to Garfield to talk about whether the market will whipsaw again, because Donald Trump in the last hour has come out and said he's in no hurry, no rush to talk to Xi Jinping, even though yesterday the White House said, and even Trump said yesterday, that he'd likely talk to Xi Jinping about these tariffs within 24 hours. Now he says there's no rush. He also said it's fine that China has launched its own retaliatory tariffs and other measures. So we'll have to see how market participants react to that. But right now, you're absolutely right. It was a more cautious approach from China this time on tariffs, even though it was almost like, pre-programmed. As soon as that deadline hit for the U.S. tariffs came in at 12:01 Eastern Standard Time, or 1:01 in the afternoon yesterday, Beijing time, Beijing rolled out its response, and we can bring up some of those steps. And it is quite measured compared to the 10% across-the-board tariff that the United States imposed on China less than 24 hours ago. Here you can see 10% tariff on oil and agricultural machinery, 15% tariff on coal and LNG, export controls on tungsten-related materials and other key minerals, Antitrust probe into Google. They're expanding that, which is highly symbolic. Let's face it, Google has not been in China since 2010. So this is more of a symbolic move. And it adds PVH Group, which owns Calvin Klein and also Illumina, to the unreliable entity list. So it's a pretty measured approach. PVH Group, by the way, gets about 8% or 6% of its revenue from China and 16.6% of its earnings. So that's going to be a bit painful for the Calvin Klein owner, and also Illumina, which is a gene sequencing company. It gets about 8.5% of its revenue from the Greater China region. But still, only 2 companies added to the unreliable entities list. So, yeah, a bit of a measured response right now from China. We'll have to see, though, because those new tariffs that China imposed will go into effect February 10th. That's 5 days from now. There's still time over the course of those 5 days for Xi and Trump to have a phone call, much like Trump did with the Mexican president and also Justin Trudeau of Canada. Maybe some sort of deal could be reached. We'll have to see how market participants respond today to the whipsaw nature of these headlines.
Carf, I mean, it's been quite a week that Chinese investors have missed out on, right, in terms of just the to and fro and the dramatic start to the Year of the Snake. I guess, to Steve's question, are we also going to see a measured response in the markets?
Well, I think there'll be some volatility. I also think that overall the picture is rather bullish for Chinese equities in particular. 10% tariffs from the US, that's still a long way from the 60% that was, had to be still hanging over people. You sort of thought, okay, he said 10% early on, and 25% each for China and Mexico, and so Canada and Mexico. And kind of the thought was that because he didn't do those straight away, well, we've got some time, it's not going to happen. Then we had the definitive Canada and Mexico, but still only 10% on China. And the rhetoric has been nothing like as strong as it was about Canada, about Mexico, even about the EU, and for that matter, deciding to take funding away from South Africa. So, Trump has also been very keen on pushing the idea of the TikTok deal. Him saying, we can wait for this call, but he thinks it's fine that China has put, measures in for itself. That speaks to the idea that, there's nothing here from that front that is going to really hurt sentiment in China. It's going to help to feed expectations for stimulus. And then finally getting around to the issue, which I think really helps to paint a bullish picture for China, is DeepSeek. The Chinese markets missed most, if not all, of the DeepSeek positives. That's going to come in line. You look at what happened in Hong Kong over the last couple of days, and over the last week or so, it's been one of the better performing markets globally. That doesn't gel with the idea that China's about to sell off because of 10% tariffs, which, it's worth remembering, come on top of tariffs that are already in existence against Chinese exports, going back to, from when they were imposed during the first Chinese term. So, the incremental hit from 10% tariffs on China is less than the immediate hit that would be if Canada or Mexico was to get only 10% tariffs.
But the caveat there is also that, of course, we have seen China veer away a lot of the supply chain away from the U.S., right? I mean, I really, to your point, have no idea what we'll see in the Chinese markets today. I mean, DeepSeek is a whole different issue right there, right? But I do wonder if we will see some moves from the PBOC, especially when it comes to the currency side. If you have tariffs, could they try to, make up for that cost with a cheaper yuan? Let the yuan just weaken.
Well, Shery, the thing is that the PBOC has actually, if anything, moved to rein in yuan declines on exactly that concern. It let it go, was sort of pushed as well to let it go earlier in the immediate aftermath of Trump's election. But when it got the chance, it pulled it right back in. And it's been pretty determined with that daily fixing in the lead-in to what then we had all these tariffs happen. It's probably been helped by the fact that although the yuan, offshore yuan, weakened noticeably after China brought in its tariffs, once the picture became clearer that this was a measured response, that Trump wasn't reacting strongly to this with the potential for counter retaliation. The offshore yuan came back down, came back up overnight. The dollar yuan rate came back down. And we're sitting now with the offshore yuan about 0.5% weaker since the Lunar New Year holiday occurred. That indicates that the currency pressure isn't too huge, and it's quite possible the PBOC will set a fairly staid yuan fix, with the message being that there's no need to rush to devalue now because, again, things are far from being at high levels of concern for China when it comes to the US relationship.
Right, our Chief North Asia correspondent Stephen Engel and Garfield Reynolds, of course, with a breakdown of how markets are expected to trade today. But we have been talking about Alphabet as well, already been caught up in the U.S.-China trade tensions. Steve just mentioned that, of course, seems symbolic given that they haven't really operated in China since 2010. But when it comes to Google, what we're watching today was also the earnings reports. And we just mentioned, you can see right there, there's falling more than 7%. The results falling short of analysts' estimates. Annabelle Drewlers now joins us with the latest. The reaction that we're seeing in the markets, how much is it to do with actual performance? We know that the focus is on their cloud division, with perhaps a contrast with just high expectations about these Magnificent Seven stocks.
Yeah, that's right. Really, the primary reaction that we're seeing today does relate to the cloud business in particular, because overall revenue, we saw growth of around 12% on the year. It was a slight miss on what analysts had been expecting at the headline level. But the cloud, as I said, the primary focus in this, because it has really been seen as the primary growth driver for the business moving forward. What came in terms of the revenue, again, it was just a slight miss on what analysts had been expecting here. So sales at $11.96 billion for the fourth quarter. The estimate you can see there had been for $12.2 billion instead. So about 2% drop from where we had been expecting on Wall Street. But essentially, the cloud business is an area that benefits from all of this spending on computing power and infrastructure. And so it's really been a primary focus as well, because DeepSeek's already been raised or mentioned a couple of times in this show. But essentially, that big focus, because DeepSeek, of course, is a model that's saying it needs less chips, less computing power. Google Cloud, of course, goes in the other direction. And so that's sort of really the big headline there. You can see cloud revenue growth falling, but still, of course, in positive territory.
Was there anything that jumped out in the earnings call?
Certainly, one of the really big focuses came down to CapEx in particular, because even against that backdrop of this concern around the cloud, of this concern around what DeepSeek and its model could mean for cloud businesses in general, the company really doubled down on its spending plan. So they pledged CapEx of about $75 billion. The estimate had been for $50 or $58 billion. So that's a huge jump, but it's also a huge jump from where CapEx had been in 2024. So the outlay plans on this, it's around $16 to $18 billion in the first quarter alone. And again, coming at a time when companies like Alphabet are really as well being sort of pressured to demonstrate what's the ROI from this intense spending as well. But they certainly do seem to be pretty bullish about the business, because they're also outlining some headcount growth plans in key areas like cloud this year, AI, and that is well notable after several years of layoffs.
And Will Jewell is there with the details. Coming up on the Asia Trade today, more analysis when it comes to those Alphabet quarterly revenue miss with CFRA research. Bernstein tells us where investors should be adding on their positions when it comes to Chinese stocks as mainland markets reopen after the break. And Credit Agricole CIB joining us to talk about the impact of tariffs on emerging markets in Asia. Much more ahead. This is Bloomberg. Checking in on crude, as it has been some sort of conflicting catalysts there when it comes to energy markets. At the moment, we're seeing New York traded crude a little bit lower at the moment. We did see oil prices falling by over 0.5% over these ongoing concerns over the US-China trade war and the broader impact on global growth, even as Beijing's response was seen as being a more measured one. We've also seen the US announcing reinforced sanctions on Iran, and that could cut oil exports from Iran by 2/3. Well, President Trump has signed a directive that aims to ramp up economic pressure there broadly on Iran. He'd earlier accused the previous administration of being lax on Tehran. Let's bring in Bloomberg's political news director, Jody Schneider, in Washington. So, Jody, what do we know?
Yeah, so President Trump today, while signing some executive orders, made comments on Iran, and then he met with, we were shown that he was meeting with Benjamin Netanyahu, the Israeli prime minister, and sort of reiterated some of this. They will have a press conference soon after their meeting. They're still meeting, and that's expected to happen very soon. And Iran certainly came up in that meeting. But what President Trump was saying was that he thinks there could be more economic pressure put on Iran. He said quite clearly, I don't want them to have a nuclear weapon. I don't want them to have a bomb. And he will do all he can from an economic standpoint to try to prevent that goal. He made clear that he thought that the previous administration under Joe Biden had not done enough of that, although sanctions had been ramped up on Iran at various points. So the memorandum he signed is a bit vague. It says they will take maximum pressure against Iran economically, but it doesn't necessarily state the steps he will take to do so.
And Jody, right now we are waiting for that press conference to start between President Trump and also Israel's Prime Minister Benjamin Netanyahu. Of course, we know that this will come at a very difficult and critical time for the Gaza ceasefire. This is also the first time that we're expecting a foreign leader to visit President Trump in this second term. We can see some people walking into the room at this moment. We can't right now see President Trump or the Prime Minister of Israel. But what are we expecting these conversations to have been like? What sort of questions are they expected to answer?
Yeah, first of all, they are friendly, and in what we saw when they gathered, we got we got to see that, at the beginning of their chatting. They looked friendly, and they have a cordial relationship. Some over the years have said maybe too cordial, that President Trump in his first term did not push back enough sometimes against the prime minister. But we expect that the main topic will have been that ceasefire. There is a ceasefire now with the objective of getting those hostages, those remaining hostages, out of Gaza who were taken on October 7th of 2023. A few have come out. There are still expected to be more, as well as the bodies of others who have died in captivity there. That has been the main goal of the U.S. Former President Biden pushed for that for many months, sent his Secretary of State on journey after journey to the Middle East to try to get this accomplished. Some of those hostages started coming out just before President Trump was inaugurated, and he has said that it was his envoys who made that happen. Without them, that would not have happened. He is now looking to have wider Middle East peace to continue this ceasefire and to also have there to be some agreements with other countries in the Middle East. But then in some of his remarks today, he talked about remaking Gaza, saying that it's terrible conditions, it's a terrible place to live, and it could be beautiful again, and even suggested that the Palestinians living there could go to other countries in the meantime before it was fixed up. So we'll see how that is regarded. Prime Minister Netanyahu has his own troubles at home, not only this war, but he is kind of hanging on by a thread of leadership leadership, and his approval numbers, while they were boosted somewhat, have come down again. And hanging on to his coalition is difficult for him. So what he hopes to get out of this is that assurance from President Trump that he will stand by Israel, the United States will stand by Israel, and certainly we will hear that, I think, in this press conference. But then also, how do you keep this ceasefire and move on from there?
We've also seen a lot of domestic developments, right, from sort of withdrawals from key human rights bodies, the issue of US foreign aid, but also there's been building concerns over data privacy. What does this have to do with Elon Musk, and what are we seeing in terms of this, efficiency drive?
Yeah, so Elon Musk has been given a role, as we know, for this Department of Government Efficiency. He has not been, confirmed by anybody. It has been a job that President Trump gave him, and there's been a lot of concern, particularly among Democrats at this point, and they held a rally this evening basically saying Elon Musk wasn't elected to anything, that Elon Musk, in doing this, in trying to pare back some of government, and particularly the federal government and federal government workers, has had access to Treasury Department material and other private material, as perhaps some of his staff has for this government efficiency effort, that perhaps he should not have had, not having been confirmed or elected to something. So there's a lot of concern around that. And then there's also, what is going to happen with the federal government, with federal government workers. Many of them, about half of federal government workers, received notices saying that if they left the government, they would be paid through the fall and they wouldn't lose their jobs, of course, causing a lot of concern among government workers, including here in Washington.
Jody Schneider there joining us from Washington, our Bloomberg political news director, with a lot to digest from the White House. Of course, we'll get back to that press conference once it starts. But other stories that we're following, Panama is said to be weighing a possible cancellation of its contract with Hong Kong-based Hutchison Ports. The firm operates 2 of the 5 ports near the Panama Canal. Sources say no official decision has been made. President Trump has accused China of having too much control over the waterway. U.S. Secretary of State Marco Rubio says Washington is evaluating Nicaragua's membership in a regional free trade agreement. That's as its government cracks down on dissent and fuels a surge in migration. The U.S. sanctioned Nicaragua last year, accusing it of exploiting vulnerable migrants. We have more ahead on the Asia Trade. This is Bloomberg. We have breaking news at the moment here in Japan. We are getting the latest labor cash earnings, wages growing the most since 1997. We're talking about nominal cash earnings for workers climbing 4.8% in December from a year earlier, and it's up from a revised 3.9% gain back in November. This is a beat on economists' expectations as well. When it comes to real cash earnings as well, they grew for a second consecutive month in December, despite, of course, the inflation that we're seeing accelerating here in Japan. We're talking about 0.6% growth from contraction in the previous month as well. Again, wages here in Japan growing the most since 1997, Heidi.
Shery, let's take a look at some of these tech earnings and how these after-hours sessions are treating the likes of Alphabet and AMD. We are seeing Advanced Micro Devices down by just about 9% there. That data business growing by a percentage in the strong double digits this year, but that outlook was what was disappointing to investors. Fourth quarter numbers for revenue topping estimates, but the revenue when it comes to the data center numbers was below projections from analysts. So we are seeing some of that downside, particularly when it comes to the outlook for AI growth. Alphabet, we're also watching off by about 8% there. Fourth quarter revenue missed expectations as well. Some of the slowdown when it comes to the cloud business and the shares clearly seeing that impact. But let's get some more perspective on big tech earnings with Angelo Zino, who's a Vice President and Senior Equity Analyst at CFRA Research. Angelo, great to have you with us. So, despite, of course, the slowdown that we're seeing in cloud, do you still think the overall longer-term trend remains positive because you still maintain a buy rating on this?
Yeah, no, we do. I mean, you look at the secular forces kind of tied to, specifically a name like Alphabet, but also, the Metas and Microsofts of the world. I mean, I think the two kind of key trends we wanted to keep our eye on kind of going into earnings season was what does the cloud picture look like? And for the most part, they're coming in very strong. The problem was the expectations were kind of very high kind of going into it. For instance, I think the street was looking for 32% growth on Alphabet's cloud business, came in a little bit light of that, 30% growth, but still very good numbers. On the digital ad side of things, you kind of look at the momentum we're seeing on both search as well as YouTube, and it also, looks very strong. So as far as kind of the secular forces tied to, most of these mega cap names, they still look very good. And then, of course, kind of the AI tilt, attached to these companies as well. The monetization hasn't necessarily maybe picked up the way that some investors out there would have hoped, but the belief is as we kind of go through 2025 and into 2026 with themes like agentic AI, we should start to see some improvement, at least on the software side of things, and in terms of these use cases for AI.
I wanted to get your view. Obviously, the sort of seismic shock that the DeepSeek story has been reverberating still, and I wonder now that we've had some time to sort of process and get a bit more deep analysis on this, do you think this changes expectations or investor patience when it comes to AI spending at these big tech giants?
I mean, as far as AI spending is concerned, it doesn't look like it, right? I mean, you kind of saw last week in terms of Microsoft as well as Meta, both either, sustaining kind of CapEx, previously planned CapEx levels or kind of increasing it. And the same thing with Alphabet here, kind of announcing that they're going to spend about $75 billion or so in 2025. Our view was that they were going to increase the number closer to $60 billion versus, a level kind of north of $50 billion in 2024. So, CapEx spend, it continues to get ratcheted higher. A big reason for that is, the competitive advantage, at least in the U.S., is kind of the fact that as you kind of move to these, next-gen compute, that it is something that, we do kind of have an advantage over some of kind of the Chinese players out there. So these U.S. players will continue, the hyperscalers will continue to aggressively spend. I think, as far as kind of, the other plays as, from, the DeepSeek situation is concerned, we continue to see benefits in terms of lower costs tied to some of these application providers out there. And then, of course, a company like Meta also kind of benefits from the whole DeepSeek situation because of, their open source model. And I think kind of, the adoption that you're going to see on that side of things.
How does DeepSeek bode for Chinese tech players, given that over the Lunar New Year holidays, we in fact saw SMIC, for example, trading at record highs in Hong Kong?
I'm sorry, can you just repeat that?
How does DeepSeek bode for Chinese tech firms?
Yeah, I mean, listen, I think on the Chinese side of things, I think it presents an opportunity for them. I think, I think there was kind of many out there that maybe underestimated the potential in terms of some of the China vendors out there, whether it be a company like an Alibaba or a Baidu or what have you. I think when you kind of look at the potential and the fact that you'll be able to kind of create some of these large language models at a lower cost point out there, I think there is kind of maybe a change in terms of the perception on how many of these China-based players are kind of being viewed out there. And you can also see it in a number of these, the stock prices in a number of these companies here over the last week and a half. You've kind of almost seen a kind of almost an upward revision to a number of the multiples out there.
When it comes to the U.S. tech environment, of course, we have seen also Beijing targeting Alphabet for antitrust issues. Obviously, they haven't operated there in over a decade. But at the same time, in the U.S., I wonder if we're going to see more regulatory moves, or with the renewed warm relationship between President Trump and the big tech giants recently, could we see actually going the other direction?
That's an interesting question. I think it kind of remains to be seen at this point in time, right? I mean, I think there's a lot of noise out there as far as the geopolitical situation is concerned, and it does create some uncertainty on the tech side of things. Our view is, expect a lot of turbulence out there. I mean, typically, at least historically, in terms of kind of the geopolitical landscape is concerned, I mean, situations have gotten worse rather than better in terms of some of the export restrictions and what have you out there. Again, remains to be seen exactly how this all plays out. I mean, it could end up working favorably kind of once the dust settles. But at this point in time, I think the visibility is really too low to really kind of make a call on it.
Angelo, great to have you with us. Angelo Zino, who's the Vice President and Senior Equity Analyst at CFRA Research. Let's take a look at some of the other tech stories that we're following this hour. And Spotify surged to a record high after posting its first annual profit thanks to a quarter of better-than-expected subscriber growth. Spotify now has 675 million active monthly users, well ahead of expectations after adding a record number of new subscribers. CEO Daniel Ek is pushing Spotify to branch out from music, adding audiobooks, podcasts, and video. Apple is rolling out a series of measures in a push for more subscription revenue. A new app lets users make custom party invitations, playlists, and photo albums with the help of Apple Intelligence AI. The app is free but needs a paid iCloud Plus subscription. It's also switching its AppleCare iPhone plan to a subscription rather than upfront payment.
Take a look at how we're setting up for the market opens here in Japan. Of course, we got wage growth coming in at the highest level since 1997, or growing by the most since 1997 already. We are seeing Nikkei futures pointing to the upside. We could see a second session of gains after that advance that we saw in the last session. The Japanese yen holding steady at the moment. We saw some gains against the U.S. dollar, but with more risk-on sentiment, we're seeing those gains being pared back a little bit. Do watch out for Honda and Nissan as well. They could be ending up tie-up talks as progress is slowing down, according to local media report. But it will really be about banks as well today, because we do have Nomura expected to report a double-digit jump in quarterly profit growth later today, wrapping up a strong earnings season for Japan's financial giants. That's after MUFG's profit soared 32% in the third quarter, beating expectations. Let's get more with our Asia investing editor, Russell Ward, here. So what should we be looking out for in MUFG's report?
Hi, Shery. Yeah, well, MUFG kept a very strong earnings season for the mega banks. All of the mega banks beat analyst estimates. They're all on track for record profit growth for the fiscal year, and that's being driven by three things. Of course, the Bank of Japan's rate hikes are fueling lending income. The banks are booking big gains from selling cross-shareholdings as part of efforts to improve corporate governance. And also the weak yen is increasing the value of their repatriated earnings from their vast overseas operations as well. So looking pretty good for the mega banks. It was interesting that MUFG actually basically achieved its full-year profit goal with a quarter to spare, but didn't increase that goal. And the bank also flagged that it's looking to be rebalancing its asset portfolio in the fourth quarter. So it's looking perhaps to clean up some unprofitable securities on its portfolio, including foreign bonds. So maybe where the big banks, other banks also flagged to do similar. So I think in the fourth quarter we might see more muted earnings, but really going forward, the path is looking good for the mega banks. A lot of tailwinds there.
We have Nomura also reporting later today in the afternoon, but they have had their own issues.
Absolutely, yeah. I mean, Nomura. The securities firms in Japan have also a very favourable environment with trading, investment banking, and also the retail side of the business with the shift from savings to investment. All of these things are helping their business. But unfortunately, late last year, Nomura, a couple of scandals emerged, one involving bond market manipulation. The bank lost some debt underwriting deals. Some trading clients took their trading business elsewhere as well. So that's we're going to be looking for the impact of that on the results. And then the other scandal was a home invasion by a former wealth advisor who went to an elderly client's home and unfortunately has been charged with some pretty heinous crimes there. So that may have impacted sentiment on the retail side of the business, just at a time when, as I mentioned, Japanese individuals are looking to do more business with brokerages.
Russell Warren, our Bloomberg Asia investing editors, will look ahead to all of those results out of Japanese firms, especially in the banking sector today. More ahead on the Asia trade. This is Bloomberg. President Trump's trade policies continue to cloud the outlook for many industries, and that includes clean energy, one of the sectors most exposed to tariffs. Trump's move to freeze federal grants and loans is also causing confusion among groups working to mitigate climate change. Bloomberg NEF's latest report shows global investment reached a record $2.1 trillion in 2024, but whether the growth trend will continue is uncertain. BNEF's head of APAC research, Ali Izadi, joins us right now in the Tokyo studio. Ali, really good to see you. Of course, we've been talking about these policies coming from President Trump for a while, how he's focusing on fossil fuels. But now that we have more clarity when it comes to tariffs, what are we expecting at this point, how his policies could affect the whole clean energy environment?
Right. So if you look at the tariffs, which are now delayed, at least for Canada and Mexico, this initial round of tariffs actually more broadly impact the integrated auto manufacturing industry in North America, as well as the energy industry, particularly oil and gas imports from Canada and Mexico, as well as electricity imports. As a share, how much of that is clean is actually relatively limited currently, given that the auto manufacturing in North America is still very much focused on internal combustion engine vehicles. And on the energy side, in at least dollar terms today, it's more the oil and gas side that would be heavily impacted if the tariffs go ahead. In terms of the additional tariffs on China, we should remember that tariffs on imports of clean tech from China have been proposed for more than a decade already. So the U.S. under various administration had started putting in tariffs on direct imports from mainland China. This resulted in many Chinese manufacturers expanding production capacity, for example, in Southeast Asia, to then import to the U.S. And then they put additional tariffs on those. So today, that sort of import dependence is already fairly limited, although some sectors, for example, stationary energy storage, are still heavily reliant on imports from China, and this would be negative for them.
We've seen a flurry of executive actions that President Trump has signed so far, Ali. And I guess my question is, what do we see as the negative impact on the energy transition? Or is it a sense that, 4 years in power is not going to derail sort of the longer-term trends that are already in place?
It's certainly more of the latter. However, we should still recognize that the executive actions so far will already slow down the pace of energy transition domestically in the U.S. For example, we have seen an executive order to freeze any additional permits for the wind sector. This is particularly critical for the offshore wind sector, where the federal government has oversight on seabed leasing. So projects that are already under construction, they're okay, but any projects that had received permits recently under the Biden administration, or those that need to go for new permits, they would be a little bit sort of, for the time being, at least in limbo. Overall, for our outlook for additional solar, wind, and energy storage capacity in the U.S. cumulatively out to 2035, we have now lowered our outlook by about 17%. The other sector that domestically will be impacted is the sale of passenger electric vehicles. If the repeal of consumer-facing subsidies go ahead, we expect that by 2030, our outlook original was EVs would account for about just under half of passenger vehicle sales. This would be reduced to about 1/3 of passenger vehicle sales. Now, the Trump administration is also trying to repeal the California Clean Air Waiver. This is a waiver that allows California to set its own standards, and about 1/3 of the U.S. Passenger vehicle market follow the California standards. If this actually succeeds, then the EV sales would be much more negatively impacted. Globally, though, this is a bit more nuanced. So the freeze on sort of overseas development aid, as well as the pull-out of the Paris Agreement, these do have some minor negative impact. For example, some of the climate finance commitments that the U.S. had made under Just Energy Transition partnerships, these will be in trouble. But broadly speaking, as you said, the energy transition will still continue to move on.
Does that mean that we are on track for the Paris Agreement goals?
I wish. So the $2.1 trillion that you highlighted, it's an impressive number, so 11% year-on-year growth, really positive. But if you look at what is required to be aligned with Paris, for the rest of this decade, annually, globally, we would have to be spending about $5.6 trillion. And that means we would have to have a growth of around 168%. Remember, year-on-year growth last year was only 11%, so we're still very far from what's needed.
Ali Izadi, despite the negative note, though, thanks for joining us here in the Tokyo studio. At least when it comes to other global investments, they still seem to be being supported. Bloomberg NEF head of APAC research, Ali Izadi, joining us in the Tokyo studio. We do have more ahead on the Asia trade. This is Bloomberg.
Than any time in history. But the bonds of friendship and affection between the American and Israeli people have endured for generations, and they are absolutely unbreakable. They are unbreakable. I'm confident that under our leadership, the cherished alliance between our two countries will soon be stronger than ever. We had a great relationship. We had great victories together 4 years ago. Not so many victories over the past 4 years, however. In my first term, Prime Minister and I forged a tremendously successful partnership that brought peace and stability to the Middle East like it hadn't seen in decades. Together, we defeated ISIS. We ended the disastrous Iran nuclear deal, one of the worst deals ever made, by the way, and imposed the toughest ever sanctions on the Iranian regime. We starved Hamas and Iran's other terrorist proxies, and we starved them like they had never seen before. Resources and support disappeared for them. I recognized Israel's capital, opened the American embassy in Jerusalem, and got it built, by the way. Built it too, just not only designated it, but got it built at a price that nobody's seen for 40 years. We got it built. It's beautiful, all Jerusalem stone, right from nearby, and it's something that's very special. And recognized Israeli sovereignty over the Golan Heights, something that they talked about for 70 years, and they weren't able to get it, and I got it. And with the historic Abraham Accord, something that was really an achievement that was, I think, going to become more and more important, because we achieved the most significant Middle East peace agreements in half a century, but the Abraham Accords in particular, and I really believe that many countries will soon be joining this amazing peace and economic development transaction. It really is a big economic development transaction. I think we're going to have a lot of people signing up very quickly. Unfortunately, for 4 years, nobody signed up. Nobody did anything for 4 years except in the negative. Unfortunately, the weakness and incompetence of those years, those past 4 years, the grave damage around the globe that was done, including in the Middle East, grave damage all over the globe. The horrors of October 7th would never have happened if I were president. The Ukraine and Russia disaster would never have happened if I were president. Over the past 16 months, Israel has endured a sustained, aggressive, and murderous assault on every front, but they fought back bravely. You see that, and you know that. What we have witnessed is an all-out attack on the very existence of a Jewish state in the Jewish homeland. The Israelis have stood strong and united in the face of an enemy that has kidnapped, tortured, raped, and slaughtered innocent men, women, children, and even little babies. I want to salute the Israeli people for meeting this trial with courage and determination and unflinching resolve. They have been strong. In our meetings today, the Prime Minister and I focused on the future, discussing how we can work together to ensure Hamas is eliminated and ultimately restore peace to a very troubled region. It's been troubled, but what's happened in the last 4 years has not been good. I want to thank Prime Minister Netanyahu for working closely with my transition team, the Special Envoy Steve Witkoff, who's here somewhere. Steve? Stand up, Steve, please. What a job you've done. What a good job you've done. Proud of you. Done a fantastic job. National Security Advisor Mike Waltz. Thank you, Mike, for working so well with us. Thank you. We have, in addition, Marco Rubio, who is on the phone right now, listening to every single word that we say, and he's going to be great. And Pete, congratulations. And Scott, congratulations. I see you're here. And Caroline's been doing a great job. She's really probably talked about more than anybody here. She's done a fantastic job, and thank you very much, Caroline. We're proud of you. But we'll only be satisfied when all of these problems are solved, and we have the team to solve them, and that's going to happen. And it's going to happen, I think, very quickly. I also strongly believe that the Gaza Strip, which has been a symbol of death and destruction for so many decades and so bad for the people anywhere near it, and especially those who live there, and frankly, who's been really very unlucky. It's been very unlucky.
We're going to leave it there, but Bloomberg subscribers can continue watching that press conference between Donald Trump and Benjamin Netanyahu at Live Go. There's also the big diary entries coming up today and later this week, and some of the other events that might be noteworthy as well. Of course, we've been watching this given that it will really determine the course of Israel's war against Hamas, but continuing to wait for more announcements. This is Bloomberg.
You're watching the Asia Trade. We're hearing from President Trump in a press conference with Prime Minister Netanyahu that the United States will take over the Gaza Strip. Take a listen to what he's saying.
Designated the Houthis as a terrorist organization. They're trying to destroy world shipping lanes, and that's not going to happen. And over the weekend, I ordered airstrikes against senior ISIS leaders hiding in the caves of Somalia and took them out. Here in America, we've begun the process of deporting foreign terrorists, jihadists, and Hamas sympathizers from our soil, just as we have people that are extremely evil, and we're sending them out of our country. They came from jails. They came from mental institutions and insane asylums, and they were dumped into our country. They're gang members. We're getting them out at numbers that nobody can actually believe. And every single country is taking those people back. They said they would never take them back, and they're all taking them back, and they're taking them back very gladly. And I recently signed an executive order combating the vile wave of anti-Semitism that we've seen.
President Trump also talking about how they should resettle Palestinians in sites outside of Gaza. But we do have the market opens here in Japan right now, and we're seeing broad upside for the Nikkei and the topics as well. Sort of a relief rally now that we have seen China take more measured and targeted counteraction against those U.S. tariffs. And we're expecting, of course, the Chinese market to also reopen today after the Lunar New Year holiday. So investors very much watching all of the latest developments around tariffs and, of course, what President Trump could say in this press conference as well. We'll bring those to you live as well. The Japanese yen strengthening a little bit against the U.S. dollar. There are a few earnings that we're watching today, and also potential news on Honda and Nissan, and that they could end their tie-up talks as the progress is slowing down, according to local media reports. Take a look at how the Kospi is also opening at the moment. We had seen gains in the previous session. Same for the Korean won. We're seeing that upside as well, especially as we're seeing a little bit more of a relief rally when it comes to those tech stocks, as well as we had continued to see some volatility, Heidi, around those AI names, AI-linked semiconductors. We, of course, have seen the downside on Alphabet, though, after hours due to the results.
Yeah, tech in focus in particular, as we've been talking about, the sort of amount of investment that's been going into AI has been in focus as well. Also something that we're watching as China rejoins the fray today. But take a look at how we're trading when it comes to Australia, which has been online for just about an hour now. We are seeing a little bit of broad upside, 0.6%. Again, some of the leadership coming through from miners and some of the very sort of broader China economy related stocks as well. As often we see that trading as a proxy here in Australia, and perhaps there is a bit of relief that the countermeasures being issued by Beijing turned out to be on the measured and cautious side. We are seeing the Aussie dollar looking pretty flat at the moment. We think mining and energy stocks in particular seeing some upside in the equity session. One stock that we are watching is Insignia, with Brookfield Capital Partners now entering the bidding frenzy with a new offer there, joining the likes of Bain Capital, CC Capital Partners for the Australian Wealth Management firm. So we're seeing that offer of $4.60 per share for Insignia, and certainly a reaction for that stock as well. But Shery, it really is sort of down to what we're seeing from the White House today, from its actions on curtailing or putting more pressure on Iran, to, of course, continuing to see how this trade war threat plays out.
Yeah, we have seen Beijing really retaliating to Trump's opening trade war tariffs, but by targeting a handful of American companies and slapping levies on some U.S. goods as well. Let's bring in our Chief North Asia correspondent, Stephen Engel. Of course, we'll be watching the market reaction when the mainland Chinese markets come back online from the Lunar New Year holidays. But so much has happened since they went away on holidays.
Yeah, that's right. So there's a lot to digest, obviously, when the mainland markets open up. And it'll be interesting to see, because we've seen global markets whipsaw on the headlines that sometimes contradict each other, sometimes, obviously blow or deal a blow to the relationship between China and the United States. And then a few hours later, you get Donald Trump saying something such as he didn't really want to do tariffs. So there's been the markets have chewed on a lot of information over the last week while China's been on holiday. So it's anyone's guess just how they will respond today. And of course, there's new headlines that have been coming across in the last few hours. We did see within seconds, in fact, yesterday afternoon, 1 p.m. local time in Beijing, when those 10% tariffs by Donald Trump on Chinese goods across the border because of the fentanyl issue took place. China had its raft of measures. Yes, they were fairly measured compared to the trade war in 2018 launched by Donald Trump in the first time, when there were more tit-for-tat tariffs. This time, much more measured. We can bring up a list of them, and I'll run through the significance of them. Essentially, they put tariffs on essentially 80 products that will take effect on February 10th, 10% on tractors and other functional vehicles, 15% on energy like coal and LNG. They also tightened export controls on critical minerals like they've done before in December, on gallium and germanium and others, this time on tungsten and others. They also launched an antitrust probe of Google. Well, that's highly symbolic since, look, we all know Google has not actually operated in China since 2010 in that high-profile withdrawal from the market. They also added 2 U.S. companies to China's blacklist of unreliable entities. PVH, which is the owner of Calvin Klein, which gets about 6% of its global revenue from China and 16% of its earnings. Also, it's the gene sequencing company Illumina. They get about 8.5% of their revenue from Greater China. So not a huge list to be added, companies to be added. So essentially, China needed to look like they were taking action, looking strong while not escalating the trade war. I guess we have to really now look at what kind of domestic policies China will do, as well as, of course, maybe in the next 5 days until those China's retaliatory tariffs take place, there could be a phone call between Donald Trump and Xi Jinping. Could they negotiate some sort of reprieve like Mexico and Canada did? We simply don't know, because Donald Trump this morning is essentially saying it's fine. I'm paraphrasing, but it's fine that China had the retaliatory tariffs, and I'm in no rush to talk to Xi Jinping.
Our Chief North Asia correspondent, Stephen Engel there. Let's bring in Rapol Agricole, who's the Asia quantitative strategist at Bernstein. Rapol, really great to have you with us. So, in a sense, I guess there's some measure of relief, or at least cautious relief for the next few weeks, given that Beijing's response was also quite measured. Does this sort of sway your view when it comes to investing in China and Chinese assets either way?
Thank you so much for having me. Actually, we started with a relatively positive view on Chinese equities, given there was expectations that the policy, is still largely accommodative, and there are signs of macro stabilizing. Of course, valuations have always been attractive in China. I would say, what has happened over the last couple of weeks. On one side, there is, of course, this big innovation coming out of, DeepSeek, which has turned the sentiment a little bit more positive towards Chinese tech names. But at the same time, we do realize that there is still largely uncertainty around tariffs. So we are keeping it very similar in terms of our positioning, in terms of what we prefer within China. We haven't really changed much in terms of our view, with respect to what we've seen over the last few weeks.
If perhaps the trade threat hasn't changed, and certainly, 10% is certainly better than 60% that was, previously threatened. But I do wonder if the DeepSeek story and some of the exuberance over exactly how advanced Chinese AI efforts and tech are going, does that change your view or perhaps add a little bit more of an element of bullishness?
So I would actually say that it was a little surprising the way that the markets have been relatively more risk-on than what we were expecting. I would not say that, the kind of reaction that we've seen from Chinese tech names is completely overblown because, a lot of these tech names have been under pressure for quite some time. And overall, I think the innovation that we've seen coming out of China AI is essentially only going to help the broader AI story from a longer term perspective. The only thing that we are, the way that we are still approaching the market is rather than being or aligning completely with this, strong rally that we've seen, we are still keeping it more measured, keeping a more barbell approach in China, where we are keeping some defensive exposures through financials, and we are quite comfortable still owning, the tech and the consumer names. So it's a more barbell approach, more balanced approach, rather than being completely defensive or completely risk-on.
What are you expecting to see from consumption when it comes to the Lunar New Year holidays that could perhaps alter your perception of the Chinese markets and where we're at that?
I think the initial data points have been positive. The broader expectation is that we'll probably continue to see more upside on the the travel data points. So I would say some of it was going to further continue to support the broader consumer sentiment. However, I would still say I think a lot of the consumer confidence is still hinging on the kind of policy measures that we end up seeing coming out of China.
How are you factoring in the Chinese yuan as well? There's been speculation that perhaps we could see some weakening on the yuan with the PBOC just allowing it to fall against the U.S. dollar, given, of course, the tariff threats.
Yeah, I think that is probably one of the tools that China is going to use to hedge against the the currency pressures and of course the tariff risk. I would of course highlight that given the extreme weakness that we've already seen in yuan, the room for China to do that remains much more lower than what it was dealing with, say, in the first tariff war. And that's probably one of the reasons we have seen the kind of much more muted reaction this time around coming out of China.
Report Agricole there, Asia quantitative strategist at Bernstein. Really great to have you with us. Let's take a look at one stock that we're watching when it comes to the first few minutes of trading in Korea. And on the Kospi, we are seeing LG CNS seeing a bit of downside, 5.3%. Its market debut in Seoul after completing that $1.2 trillion IPO. This is Korea's biggest since 2022. We saw those shares being priced at 61,900 won each, valuing the company at 6 trillion won. And we have seen sort of quite a bit of array when it comes to the bullish views on the stock from analysts. One analyst predicting a 23% rise from the IPO price. LG CNS is the diversified tech services unit of LG Group. So we've been watching this, given that it is the biggest initial public offering since 2022, but starting off a little bit to the downside against a broader Kospi that is actually seeing gains of just over 1%. More ahead on the Asia trade. This is Bloomberg.
The U.S. will take over the Gaza Strip, and we will do a job with it to will own it and be responsible for dismantling all of the dangerous unexploded bombs and other weapons on the site.
That was President Trump in the last 15 minutes or so saying that the US will take over the Gaza Strip. Let's bring up Bloomberg News editor Michael Heath for what to make of all this. He's then gone on to say we'll do what's necessary for Gaza, we'll take it over, we'll develop it. This decision was not made lightly, and they see a long-term ownership position in Gaza. So, I mean, we're trying to sort of visualise what this means and what that means for a two-state solution.
Yeah, well, I mean, it sort of suggests that we're moving to something else other than a two-state solution. One thing that the president did say, in fairness to him, was that the cycle of trying to come up with a peace plan, the violence that continues, the endless spiral, and nothing ever being resolved. He has a point there that this has been going on for 30 years and it just keeps getting worse and worse. And the level of destruction in Gaza, I mean, it's obviously been levelled. There are no utilities. There is nowhere for people to live. So there's some basic premises there are right. But the notion of being able to then just transfer those people to Egypt or to Jordan or to somewhere else, I mean, that's basically sort of ethnic cleansing under all definitions. And the US then going in there, again, the US has the resources to be able to clear that area and to take away the munitions that are undetonated and that sort of thing. But what tends to happen is when you have countries like the US or wherever coming into these regions, they become targets for attack. So the whole security idea becomes a question. What we might be looking at is that the US saying it will be there means that it's not being handed over to Israel. So that's about the most you can sort of say at this stage until we get more details. But trying to, I guess, break the deadlock. I mean, Trump is, he sort of sees himself as a change maker or someone who can bring, new ideas to a situation. Whether those ideas work is another question, but the analysis of the problem is correct. It's just the solutions are going to be very difficult to enforce because shifting 2 million people out of their country against their will to people who don't want to take them. The only point being that Trump again says is right is that Jordan and Egypt are heavily reliant on US support, so their ability, they don't have a lot of leverage here. But I suspect that this is a case where the Arab street would not allow their own governments to do this as well. So it's such a complex situation that to just come up with very, very, what sound like perhaps plausible solutions just offhand, there's just so many layers and difficulties below that it's hard to see, this sort of getting off the ground, but we'll just have to watch.
As you've said, the Arab nations have roundly rejected this idea of relocation of Palestinians. And I also do wonder, it's surprising to me in a sense, because how much support or appetite is there domestically in the US to have this level of involvement?
Well, it just contradicts the entire notion sort of what President Trump's been saying is that he wants to sort of focus the US on the US and just do what works for America and what makes it wealthier and strong.
Foreign aid agreements.
Exactly.
And such,
I mean,
right?
yes, the termination of foreign aid, or at least suspension of foreign aid for the moment. I mean, the amount of money we're talking about here to remove all this rubble and this is a long way from the US and bring companies in or whatever. I mean, it's billions and billions of dollars. So, yeah, it is a contradiction. By the same token, the idea that you could bring some form of solution to that is going to be tempting to any statesman. We have to remember that President Trump is in what would be his second term. So he's also looking for some sort of legacy, dramatic legacy potentially here as well. And if there is some way to undo this knot that's been stuck there for 75, 80 years, it would be a remarkable thing. But yeah, there's a lot of hurdles you can see, almost immediately.
Yeah, and we're really watching those lines coming from President Trump as well, that Prime Minister Netanyahu, that President Trump has, quote, a different idea on Gaza that's worth exploring. So I guess they're still really trying to iron out what they could get out of these negotiations. But Mike, also, I was wondering, you were alluding to Gulf nations. How would this sit, even with these Arab nations having such a large U.S. presence trying to develop Gaza?
Yeah, well, I mean, I think that's sort of what President Trump's alluding to is that perhaps they would do a lot of the financing of the development of it, particularly if the US is having a stake in it or control of it, because that would imply US security there. But by the same token, I mean, what's sort of underlying a lot of all this too is the potential to get an Israeli-Saudi agreement, and that was, that seemed to be within reach just before October 7th, 2023 happened. One of the motivations for that among Hamas was to try to torpedo that agreement. And Saudi Arabia said pretty clearly it needs to be seeing progress toward a Palestinian state in order for this to go ahead. Now, this sort of changes sort of the goalpost, moves the goalpost completely here. So we'd have to just see what the Saudi reaction would be. But again, even though a lot of these countries aren't democracies, they do have to listen to the street, to their populations. And, the sympathy with the Palestinian plight is high. The amount of damage and suffering that was caused in Israel's campaign, the idea that then of them losing their homes on top of that, even if it is, and no doubt there would be, a nicer spot and more secure living and that sort of thing, it's going to be very, very difficult for them to reconcile. So it's going to take some pretty deft politics. As to Prime Minister Netanyahu, well, he's been around a long time, and he's already obviously dealt with President Trump once and quite successfully on behalf of Israel. So I guess that he's sort of tried to see, well, in amongst what the president's suggesting, what's realistic, what's not, and how can Israel potentially benefit out of it. So yeah, very, very interesting press conference, and we're just going to have to keep watching for more details, basically.
Yeah, Bloomberg News editor Michael Heath, and as Mike mentioned, this is the press conference that's still ongoing. Let's take a look, take a listen to see if we can sort of get some more details.
Any form of terror, the 28, if you call it, the 28 sites of terror, they had no money for any of it. They had to do their own and focus on their own well-being. And I hated to do it then, and I hate to do it just as much now. And I say this, and I say this to Iran, who's listening very intently. I would love to be able to make a great deal, a deal where you can get on with your lives and you'll do wonderfully. You'll do wonderfully. Incredible people, industrious, beautiful, just an unbelievable group of people in Iran. And I know them well, have many friends from Iran and many friends that are Americans from Iran, and they're very proud of Iran. But I hated to do it, just so you understand. And I hope we're going to be able to do something so that it doesn't end up in a very catastrophic situation. I don't want to see that happen. I really want to see peace, and I hope that we're able to do that. They cannot have a nuclear weapon. It's very simple. I'm not putting restrictions. They cannot have one thing. They cannot have a nuclear weapon. And if I think that they will have a nuclear weapon, despite what I just said, I think that's going to be very unfortunate for them. If, on the other hand, they can convince us that they won't, and I hope they can. It's very easy to do. It's actually very easy to do. I think they're going to have an unbelievable future. Yeah, please, sir, go ahead.
You just laid out your plan for Gaza.
Yes.
Can you lay out your plan for Ukraine and also...
For Ukraine?
For Ukraine, yes. You consider yourself a strong leader. You blamed your predecessor for letting Russia to take over Ukraine. Will you demand from Putin to get out of Ukraine, from sovereign territory of Ukraine?
So we're dealing right now on the subject. I don't want to spend a lot of time because we're here for another reason, but we are having very good talks, very constructive talks on Ukraine. And we are talking to the Russians. We're talking to the Ukrainian leadership. It would have never happened. That would have never happened. It should have never happened. I get reports every week, the number of soldiers, mostly soldiers now. The cities have been largely demolished. You talk about a very sad sight to see. We talk Gaza. Well, many of these cities look as bad as Gaza and worse, what's happened to them. And I want to see that end. And I want to see it end for one simple reason, the life of young people being absolutely obliterated on both sides. You probably have 700,000 Ukrainian soldiers dead, 800,000, maybe more Russian soldiers dead. It's very flat land, and the only thing that's going to stop a bullet is a human body, in this case, usually soldiers. And the numbers are staggering when you hear the real numbers in Ukraine, what the numbers are. And this doesn't include the cities that have been demolished and all of the people that were killed. So I want to see it stopped. We're having very good talks, and I think we're going to get it. I think something will be hopefully dramatically it will rise above everything. You can't let this continue. You can't. This is an absolute slaughter that's taking place on the beautiful farmlands of Ukraine, and we have to stop it. We can't let this continue. It is a human tragedy, and we're going to try very hard to stop it. Yeah, please go ahead, sir. Go ahead.
Mr. President, thank you very much. Okay. Mr. President, what's your view about Palestinian leader Abbas' role in all the regional changes you want to do? And the question for the Prime Minister, what's your view on President Trump wanting to reach a deal with Iran and not a much more active military stance towards it?
Go ahead, baby. Go ahead.
I think the President just said something that I think is the pivot of everything that we're talking about. He said Iran cannot have a nuclear weapon. And we fully agree with that. If this goal can be achieved by a maximum pressure campaign, so be it. But I think the most important thing is to focus on the goal, which the President just did, and I fully agree with him.
Well, I said it, and he said it very well. It's a campaign of pressure to see if we can get something done. He doesn't want to do what some people think will automatically happen because they're very difficult people to deal with, as you know. But if we could solve this problem without warfare, without all of the things that you've been witnessing over the last number of years, it would be, I think it would be a tremendous thing. Go ahead, please.
Do you have any plans to visit Israel soon?
To visit where?
Israel.
Oh, well, I love Israel. I will visit there, and I'll visit Gaza, and I'll visit Saudi Arabia, and I'll visit other places all over the Middle East. The Middle East is an incredible place, so vibrant, so it's just one of the really beautiful places and with great people. And I think a lot of bad leadership has taken place in the Middle East that's allowed this to happen. It's just terrible. And that includes on the American side, by the way. We should have never gone in there a long time ago, spent trillions of dollars and created so much death. So that includes Americans. But, yeah, I'll be visiting a lot of different places in the Middle East. I've been invited everywhere, but I will be visiting some, yeah. Okay. Let's go. Caitlin, go ahead.
All right, President Trump and Prime Minister Netanyahu, they're continuing with that press conference saying that he will visit Israel, Gaza and Saudi Arabia, talking about the US taking over the Gaza Strip. We're seeing oil holding that drop as his trade wounds concerns really conflict against this maximum pressure campaign against Iran. Take a look at what we're seeing when it comes to trading in Asian markets. And of course, we are sort of just waiting for that reopen in China as the main event. But well, we are also watching some PMI gauges coming through for these Asian economies, including in Singapore as well as Hong Kong. So what we are seeing now is really some of these numbers that have come through with the Hong Kong January whole economy PMI coming in at 51. A little bit of softness compared to 51.1 in December. For Singapore, we're seeing quite a bit of contraction, actually falling below that 50 level, 49.9 versus 51.5 in December. Shery.
And in Japan, we're also getting the PMI numbers broadly in line with the previous number. The final January PMI composite, 51.1. The PMI services, 53. So a little bit of an improvement from the previous reading, as we have the Japanese yen right now holding steady. A little bit of strength against the U.S. dollar. We're still trying to digest all of the news around tariffs and, of course, all of the other currencies on the other side of the U.S. dollar trade in focus right now. Take a look at how markets are moving at the moment as we continue to expect the China market reopen. Of course, that's happening today. Take a look right now at how currencies are trading, because we are seeing the offshore yuan holding steady at that 728 level. We have seen that really fall to around record lows against the U.S. dollar, given the tariff news coming from the U.S. But also at the same time, of course, we do have the more perhaps measured response that we saw from China yesterday as well. Joining us now from Hong Kong is Cheung, Senior Emerging Market Strategist at Credit Agricole. Eddie, great to have you with us. So let's start with the big news today. I mean, Chinese mainland markets coming back online from the Lunar New Year holidays, and there's so much to digest on the tariff front, not to mention that they missed out all of the volatility around the Chinese startup DeepSeek. What are you expecting today?
Well, I think for the moment, if we're talking about FX, it's going to be still steady as she goes story. Basically, heading into the holidays, we saw there was some pressure on the CNY. The authorities were basically holding dollar CNY fixing very, very steady. Since then, as you mentioned, there's been a lot of volatility. Dollar CNH has been moving around back and forth. But our view is, in the context of this potential trade war between U.S. and China, in the context of the tariffs that are happening, it doesn't really make sense for China to introduce more FX volatility at this point in time. So in terms of dollar CNY fixing today, we are expecting a fairly steady fix. They've been holding this fixing below 720 for a while. We don't expect them to allow a very, very large move upward in dollar CNY spot at this time. There's really no sense in giving the U.S. more ammunition to hold against China right now. So it's going to be more steady as she goes for now.
When it comes to emerging market currencies, given, of course, the pressure on the weakness of the Chinese yuan that's always been perceived as an anchor for EM Asia, how are we expecting them to trade, given also the other side of that trade, the strength of the U.S. dollar?
Well, I think it's been very clear. I think, firstly, the U.S. dollar remains in the driving seat. And as long as for dollar CNY we're not seeing unprecedented volatility, as long as we're not seeing massive volatility from that point of view, the impact on dollar Asia, in our view, is still fairly muted. Of course, in the context of the trade war or the tariff news that is happening right now, that does form a bit of a drag. In our view, the more cyclical currencies, the more trade-oriented currencies, the likes of the Korean won, Malaysian ringgit, Singapore dollar, these are the currencies which will be a lot more impacted. We have seen a bit more volatility in these currencies. But for now, as the dollar is softening a little bit since yesterday, it probably looks to be a bit more of a positive start. But after that, it will still be very, very driven by the trade headlines, how China responds, and of course, where we start with dollar CNY.
The main impact, of course, has been the primary targets of these tariffs, China, Canada, Mexico. But I do wonder, there's some optimism when it comes to how much China has diversified its trade flows. But what's the vulnerabilities if you take a look at some of the trading partners within Asia, Vietnam, for example, or even the likes of Korea?
I think there's two sets of vulnerabilities. So firstly, if we look at Trump and his policies, he is still very, very focused on the bilateral trade deficits between U.S. and the individual Asian economies. So for example, as you mentioned, Vietnam has a very, very large surplus. Korea, Taiwan, Malaysia, these also have very, very large trade surpluses. And it has actually increased since his first term. So from that point of view, we do expect that to be a point of vulnerability, to also be a concern. If you look at the U.S. FX Treasury report that came out in November of last year, these also highlighted the large bilateral surpluses that these economies had with the U.S. So that will be the first thing. The second thing will be, well, in terms of the integration of the supply chains across Asia, clearly these trade-oriented economies, they also are very integrated in terms of the supply chains going through China, going to the U.S., and of course, vice versa. So if we see this rising trade friction coming through between U.S. and China, then clearly for all these economies, it will also impact their trade flows. We saw this morning, you saw the Singapore PMI came out a bit lower. In terms of the Asian PMIs, actually it has been turning a bit more mixed. We believe that heading into the end of the year, there was a bit of front loading for exports and for manufacturing. And now that potentially softens off a bit now that we are now entering January and February.
Your baseline when it comes to China tariffs was a great deal sort of more serious than what we've seen so far. Has that baseline shifted, or is there always that degree of uncertainty because there's so many different ways that this will play out? If he gets a deal, if there isn't a deal, if there's broader issues that might result in a more hawkish approach from the new administration.
Well, absolutely. I would definitely agree. There is a lot of uncertainty at this point in time. So our baseline is we're not in the most aggressive scenario of 60% tariffs. We're looking for somewhere in between around 40 or 30 to 40% or so. So clearly, Trump starting off with 10%, I would say is slightly positive. In terms of the China response yesterday, it was also very, very targeted. So I would say both sides are kind of positioning for there to be some sort of a negotiation. However, with regards to negotiating and whether there will be a successful negotiation, I think there are still a lot of issues which both sides will still need to work on. And probably that will mean that what we saw over the past 2 days is more of an opening salvo. It just allows the two sides to come to the table, talk a bit more, and potentially there will be more escalation further out. We're just at the beginning of Trump's term. Both sides are still feeling each other out. Of course, there are pressures from China's side as well. But there's also pressures both ways. If we do see a massive escalation of tariffs, our estimate is in terms of the GDP drag on U.S. growth, it can drag down U.S. growth by about 110 basis points over several years. It can push up inflation by 70 basis points. So that is also going to impact the U.S. And we must not forget that side of the picture. It's not just going to be about the China growth story. So given all these considerations, I think it makes sense for both sides to come to the table. But in terms of getting to a final agreement, we think probably that will need a bit more time. And that's also why we're probably in a bit more of an uncertain environment for now.
Eddie, always great to have you with us. Eddie Cheung, Senior Emerging Market Strategist at Credit Agricole CIB, as we count down, of course, towards the reopening of mainland Chinese markets. The consumer outlook will be in focus, particularly just after Lunar New Year holidays. And we'll be speaking exclusively with the CEO of IMEX China a little bit later as well. At the times on your screen right now. Watching gold at the moment as we continue to see that haven demand. Spot gold climbing to a fresh record high on that haven demand. And we've really seen this, of course, in the last few sessions when it comes to some of these fears over the trade war, the measures on Canada and Mexico and on China in particular. So another all-time high. The 10% tariffs on China and then the sort of retaliation or the countermeasures from Beijing seen as being more measured, but still we are seeing that supporting haven demand. Some of the weakness that we've seen in the dollar as well has also made gold more appealing for some of those foreign investors. But of course we have seen that effect playing out for precious metals even before those tariffs were announced. Gold alongside silver really surging above international benchmarks. We do have more ahead on the Asia trade. This is Bloomberg.
Take a look at how Asian tech names, especially semiconductors, are trading at the moment, because we are seeing that upside, especially for SK Hynix. That's seen a lot of volatility lately, especially with news of AI startup from China, DeepSeek. Tokyo Electron at the moment losing a little bit of ground as we follow, of course, the fallout from the latest earnings season from Alphabet as well. Alphabet contending with their own geopolitical issues as they were just targeted by Beijing for a probe into antitrust. Bloomberg Intelligence saying that the focus of China's investigation is likely on the market dominance of Google's Android mobile phone operating system in China's smartphone sector. Today, the market reaction, though, along with AMD on those disappointing fourth quarter results. Let's get more on those earnings with our tech reporter, Annabelle Drewlers. Annabelle, so really Alphabet's cloud business had a pretty disappointing quarter.
Yeah, this is where investors are really focusing a lot of their attention. Disappointing, yes. I mean, it was just a little bit short of what analysts had been expecting in terms of the overall revenue, so we can take a look at that. But essentially, coming in at 11.96 billion, the estimate had been for around 12.2, so about a 2% drop. But of course, it's an area that Wall Street pays a lot of attention to, because given that there are other parts of Alphabet's business that are sort of more stable, this is really the big growth driver moving forward, and the extra attention coming down to it because of DeepSeek, of course, the Chinese AI startup that really pushed out this new model that has a model that is a small language model instead of a large language model that, of course, has been the mainstay of the likes of OpenAI to date. And so that big focus on would we need so much compute power moving forward, and were they starting to have less demand for it as well? So the cloud revenue, very much the major focus. You can see here that it's a bit of a drop-off in growth, though of course still growing. Overall, we saw the revenue, again, just missing analyst estimates a little bit, but still up 12% overall. YouTube and revenue, they were the bright spots for, rather YouTube ad revenue and search were the bright spots for the quarter.
And of course, in the wake of DeepSeek, there's a lot of attention when it comes to spending.
That's right. I mean, you know, all these companies in the big tech space really need to be able to justify why they're spending so much money moving forward, particularly when you've got models like DeepSeek that say they can do the same, but just for less money instead. Alphabet, though, really signalled a very big and ambitious CapEx plan for 2025. So in terms of what they're expecting to spend, it's $75 billion. That is well above the estimate, which had been for around $58 billion. Instead, it's also well above what they spent in 2024 as well. In terms of how that's going to be allotted, so they're saying $16 to $18 billion will come in the first quarter alone. But again, very notable because of all of this attention that's really been on DeepSeek and the model that they're following as well. But still, Alphabet's pretty bullish on the outlook because they're adding headcount in cloud, they're adding headcount in AI, and that follows years of layoffs.
And what about AMD? I mean, they took a big hit after hours as well.
Yeah, that's right. And again, it kind of, I mean, a lot of roads point back to DeepSeek at this point, but essentially there's concerns around their data center unit in particular. And that's why we're really seeing a pretty sharp reaction today. That stock down around 9%. But essentially the data center division that reported revenue for the period of 3.9 or just near $3.9 billion. That missed the estimate, which had been for around $4.1 billion instead. And so there's that concern that AMD's push into AI equipment is sort of losing momentum at this point. And again, that has been stoked by the arrival of DeepSeek in this space as well.
Annabelle Jewell is there, and of course a lot of news flow when it comes to President Trump this hour. We are hearing now that the Trump administration is looking at legal options to revoke loans from a $400 billion clean energy bank. These are options to potentially cancel loans that were issued under that $400 billion program to finance clean energy technology, that it considers overhauling that initiative, according to a person familiar with the matter. The new director of the Energy Department's loan program is retooling efforts to focus on tech favoured by the new administration, including the likes of nuclear power and LNG. There's almost $47 billion in conditional commitments to companies that are yet to finalise, and it's unclear at this point which loans the Trump administration would try to claw back. In the meantime, this is one stock that we're watching when it comes to the Korean session. Shares of LG CNS, this is the diversified tech services unit of South Korea's LG Group, off to a pretty weak start in a highly anticipated market debut. It completed the country's largest IPO since 2022. Our Bloomberg Asia Stocks reporter Yu Kyung Lee joins us now from Seoul. And, you know, I think there were higher expectations for this, but what do we make of the market reaction?
Sure. So yes, there were higher expectations that the company's shares will go up this morning because apparently the company has priced this IPO at the top of the marketed range, and there were intense competition to get the piece of the company shares during the IPO book building process. However, today's reaction in the stock market show that the company's efforts to appeal to investors as one of the potential AI beneficiary has fallen flat. It looks like investors are still seeing that the company's valuation may have been pretty expensive, and investors are probably not buying the company's bids to expand into new businesses, such as the futuristic robotics or the AI, generative AI business that the company's executives have promised. So it looks like LG CNS has a lot to do in order to prove that it's making some progress in those hot topic business items such as AI and robotics.
What about the fact that we have been hearing more from analysts that we could see that shift of attention from hardware to tech software? Could this give it an extra boost, though?
Yes, I think this is the latest, one of the most interesting trends that we're seeing in the stock market. A lot more investors are paying attention to the AI software, internet and application developers in Asia or in the US, and then rotating their money out of the AI hardware or chip makers that are facing more stretched valuation concerns. So we have seen that gains in some of the internet stocks in South Korea or in China, for example, in the past couple of weeks. And it looks like investors believe since the release of the DeepSeek that there could be more beneficiaries in the software space and the internet space. And that looks like one of the areas that the LG CNS was trying to make its reputation for. But LG CNS is a 37-year-old company, and it started as like providing the back-end software to a lot of the affiliates of the LG Group. And each of the South Korean chaebol has similar company that provides back-end software to its software. So a lot of its businesses still rely on the domestic revenues, mostly from its affiliates. So those provide pretty stable cash flows, but those companies often have still made much progress outside South Korea or outside their usual back-end software business. So it looks like the company still has a lot to prove in order to show that it could create that extra new growth engine.
Bloomberg's Asia stocks reporter Yu Kyung Lee joining us from Seoul. As we're watching some of those stocks trading in Japan here as well, of course, we have heard about a potential breakdown when it comes to tie-up talks between Honda and Nissan. We have heard that report from local media that Honda proposed buying Nissan shares and making it a wholly owned subsidiary, but Nissan strongly opposed the plan. We'll be watching those stocks today in the trading session, as we're also watching some of those movers because of earnings. Panasonic, for example, was rising as much as 15% at one point today. The company's earnings beat analyst expectations, but also they announced a restructuring plan. When it comes to Mitsubishi Heavy, we had seen them boost their net income guidance for the full year. The guidance missed the average analyst estimates, though. So we are seeing some downside in the trading session. When it comes to Nintendo, they cut their outlook for the final months before the release of the Switch 2 console, but we have seen a lot of optimism around that device, of course, around Nintendo and other services and entertainment that it provides. When it comes to MUFG, profit jumping 32% from last year, beating expectations. Actually, we've had a pretty bumper season for bank earnings this year. We have more ahead on the Asia Trade. This is Bloomberg. We're counting down to the reopening of mainland China markets after the Lunar New Year holiday. Traders playing catch-up on a turbulent week and the first salvos of a new trade war with the U.S. The China Show co-anchor David Ingles joins us now from Hong Kong. David, I mean, it's going to be an exciting hour for you. I do wonder if we should start betting right now if we're going to see downside or upside, given that, of course, we also had DeepSeek, of course, in play.
That second point you just made there, Shery, is likely going to tilt the balance in favor of the bulls today. And the reason I say that is, you know, if you use, say, Hong Kong stocks as a proxy for sentiment out there, so already when you look at that purely, and that has a DeepSeek element to it as well, it does point to some gains at the open, right? On top of that, though, you have a lot of the heavily weighted stocks that are also coming online today that will need to play a sort of mechanical catch-up. So that's, I think, point number one. Some of the proxies, as you can see, are also pointing to some upside. Some of the big tech plays, of course, which, you know, have been expressed really quite clearly in Hong Kong, are not in mainland China, but suffice to say, the resilience of this market is expected to show up at the cash market open. A couple of other things, of course. You have the Stock Connect coming online, so there's that, of course, that exchange between Hong Kong and China. Offshore bonds did quite well, relatively speaking, so that, the local currency bond markets are one to watch as well. Plus, of course, we're looking at the Chinese currency and to what extent really does the PBOC need to still keep anchoring this currency at the moment, given, of course, the currency, looking at yesterday's move, did also show resilience in the face of all these, back and forth and headline risk here, guys.
Are there any specific sectors or stocks that you're going to be watching very closely? And what about what's going on in Hong Kong as well?
Yeah, among the million things we'll be tracking here as well. I can see Rebecca's just getting online here as well, so she's gonna help you through this. Two things on Hong Kong. It's actually been about 4 months, and we're at 4-month highs in Hong Kong since some of these benchmarks have been exhibiting overheating signs, so overbought territory. So we'll see whether or not that's a sell trigger for investors here, just to underscore how well things have been this week. And one stock in particular, SMIC, watch that very closely at the open today. I think the stock is up 20% this week in Hong Kong so far. Record high. There's a listing, of course, onshore, so watch for that to play some catch-up. And, of course, the A&H premium, the dynamic, the premium of A shares over H shares actually fell to a 4-month low. So that, again, will provide some lift for A shares when things come back online in about 25 minutes from now.
The excitement is palpable. Bloomberg's David Inglis in Hong Kong. I'll let you go and get another cup of coffee before the hour kicks off. And some of those stocks that we will be watching when those markets reopen in mainland China and in Hong Kong, we'll be watching the likes of CK Hutchison. Panama considering cancelling its port deal with the firm after those threats from President Trump. And as China reopens, watching CATL and Midea. They're among the 28 Chinese stocks that Morgan Stanley warned investors to avoid due to their tariff risk exposure. Well, that is it for the Asia trade. That coverage of the China reopen is up next. The China show is next. This is Bloomberg.